In our first and second tutorial, I showed how to prepare journal book to rectify the errors, and in the second part, we learned the suspense account, okay? The ledger account for suspense account. Good. Here, what is the question? Asya is a trader. She prepared her trial balance at 31st August 2023. The credit side total 273 more than the debit side. Asya placed the difference in a suspense account. Asya later discovered the following errors. So here we see 5 errors, okay? So she already prepared her financial statements, okay? After preparing, she discovered this error, okay? Now, obviously, there will be some impact on the gross profit or loss, or on the net profit or loss, yeah? So now here I'll show you what are the impacts, okay? So number one, we see credit purchase $112 from Jacques had been entered twice in the purchases account, okay? What are the purchases? Purchases are expense, yeah? So expenses recorded twice. That means expenses had been increased, okay? So when expense increase, gross profit decrease, yeah? When gross profit decreases, net profit will be also decreased, yeah? So now here we will write gross profit. Here we will write net profit. So for this transaction number 1, we see gross profit will be decreased. And if gross profit decrease, definitely net profit will be also decrease. Okay, so why gross profit decrease? We take purchase in the first part of income statements, means trading account section, yeah? We show this one as an expense. So here expense is increasing, means the gross profit will be decreased. As a result, net profit will be also decreased, okay? Good. So what is number 2 here? The wages account had been overcast by $300. So what are wages? Wages are expense, yeah? So we take this expense in the second part of income statement. Means after preparing gross profit or loss, we add all incomes, then we subtract all expenses, yeah? So in the income statement, second part under expense section, we write wages. So wages do not come on the first part of income statement to calculate gross profit. So there is no impact on the gross profit. So here as expenses increased, overcast means increased by $300. Now tell me what will be the effect on the net profit. Well, if we said decrease, you are correct. Here on the gross profit, there is no impact. So we write here no effect, and net profit will be decrease. Okay, great. So now here third transaction, cash received $75 from Savanah. A trade receivable had only been entered in the cash book. So Savanah is a trade receivable, yeah? It is an asset. Cash also an asset, yeah? So here we receive from Savanah. Cash will be debited and Savanah will be credited. So in the income statement, we take only nominal accounts, yeah? Means all expenses and incomes, yeah? So here Savanah and cash both are asset. Asset comes in the statement of financial position, means balance sheet. These do not come in the income statement, both the section. So what does it mean? It means that there is no impact on the gross profit or net profit, okay? So number 3, we will write here no effect on the gross profit and the same on the net profit. Okay, so third one is done. We have here number 4. The total of sales returns journal for August 2023 of $198 had been credited to both the sales returns account and the purchases returns account. Okay, so now what will be here? So sales returns. What are the sales returns account? These are contra revenue account, yeah? Okay, so here sales returns decrease the gross profit, yeah? When we write revenue at first in the income statement, then if there is sales returns, we subtract, yeah? That means sales returns decrease the gross profit. Here, what happened? The total of sales returns, $198 had been credited to the both sales returns account. Credited, that means sales returns had been decreased, yeah? Normally, this account will be debited, but here it had been credited. That means we showed less sales returns in the income statement, and we know sales returns decrease the gross profit, yeah? So as we showed less, so our gross profit had been increased, yeah? So when gross profit had been increased, so net profit will be also increased, yeah? So let us write here number 4, gross profit increase, and same net profit also increase. Okay, great. The last one, number 5. A payment to Sophie, $93 had been recorded as $39 in Sophie's account. So payment to Sophie. Sophie is a supplier. We paid to Sophie. So supplier is a liability. So liability, and we paid 93. That means cash or bank balance. These all are statement of financial position related items. Okay, liability will be appeared in the liability section of the balance sheet, and same cash or bank will be appeared as an asset in the statement of financial position. Same, okay? So here these are not expenses or incomes. So as these are not expenses or incomes, there will be no effect on this gross profit or net profit, okay? So here number 5 we will write no effect on the gross profit, and same no effect on the net profit, okay? So sometimes you see this type of questions on the exam. Still you need to understand why we prepare, why we rectify the errors, and what are the impact of the errors on the gross or net profit, okay? So these are very basic, you need to understand. If you understand many questions, different types of questions you will have, you will be able to answer on your exam.